And it's time. New Zealand USD Forex pair, 10-year data, monthly candles. Let's get right down to what type of action are we having. Let's draw the lines in the sand. Keeping my little black area here to be able to think. And that will be my 1 year, about 2 years support line, and my resistance could be right here. Right away, set some alerts for that bullish breakout right there. So now we seem to have a nice consolidation pattern, and we're approaching the breakout line. So let's just look at that target, what it would give us, and see if there's some walls consideration. And right now, other than these continuation of patterns when it went down, there might be a little resistance here on the way up, because we have support at that level that was broken down. So this support now becomes a resistance. So you might have some resistance here, but you're still under this support to resistance, another wall here, and you're under the top. So if I had a target, let's say that if this was a big pattern here and I had a target to go all the way up here, that's when I would probably cheat and lower my pattern to at least not higher than the high. It will reduce my reward, but it will increase my chance of reaching my target. Or I could even cheat even more, lower my rewards, have a worse risk to reward. And if it's still acceptable to play, if the odds are still skewed in my favor, I would put my target right here. So you get out of the ship faster before the turbulent seas are ahead. And look, it's monthly candles. It's the more I think about it, it's probably it seems slow, but it's very if your emotional IQ is not up to par, it could be very stressful, because if you're used to doing dailies and smaller candles, even weeklies, and you're used to going back to the chart, listening to the news and seeing all that intraday action or intra candle action from a monthly perspective, the swings there, like these huge swings there, that might make you go crazy. See, there was a top pattern here back in the days. I'm drawing this roughly. It was broken down, and okay, let's just, for argument's sake, had this pattern, top pattern back in the days. And just to put you in context, you have a breakdown. Oh, the next month, this is like 30 days there. Price action went all the way back up to almost the breakout level. You would have sold short here, the 72.62. Sell stop above the wick here, 78.91. But as soon as you're in, the next month, right away, it goes against you. And then you say, was I wrong? Like the immediate next candle, the next month there, the action goes against you. But your targets, if done properly, if you really measured correctly, you took the pattern with the closer target, and you weren't greedy, and you didn't have some crazy target all the way here, and you look back to make sure that you weren't going through some hard support that would fade your action and reduce your chances of reaching that possible target, reduce your probabilities. Then if you put everything on your favor, and when you had the breakdown, you didn't have, since we're playing the breakdown, you didn't have any bullish or divergence. Let's just check here. Lower lows. You're all set concerning divergence. Then you should try to sleep well. And if you can't sleep well, just remember, You have that money management, 1% max of your NAV you would lose on that trade. The size here, you would size from your short sell to your stop loss, all that. You have to take a size position in that forex pair that equals less than 1% of your NAV. So even if some crazy action, the next candle goes there, well, you're only going to lose 1% of your NAV if you get here. So right now, maybe at this stage, you had a 50% retrace. You'd only lost 0.5%. You should sleep very well like that. And so days goes by, and then it moves, goes back in your favor. No, it goes back up. Wow, this is getting close. You're getting close to getting triggered out. Now you're in the red. You've never been in the green right here. You bought, and 1, 2, 3 candles. You've been suffering for 90 days. The trade is going back to your stop loss. And fourth month. That's 120 days later. Bam! You're back in you're in the green zone. That's a lot of time to wait for your trade to go back in the direction that the chart pattern implied the move. And that's hard. I think that's very hard. Maybe that's why people are more attracted to, I thought it was the adrenaline that attracted people to daily candles and the smaller candles, but maybe it's just that quick resolution gets you out of your misery and your stress, and then you're able to take another trade and relive that cycle. But monthly candles, man, you're there. You're like, the way I do it with my trading for work, I'm hopeless. Once I've said that, I've learned in the past that I've played too much around, and I let my emotions. I looked at the chart and I moved my sell stops up. Here you could have been tempted to move your sell stop along the way, but if you would have moved it anywhere from above, like from that wick, you could get triggered out there. It came close here. So I just said, if I don't have to look at the chart, I protect my emotional capital, and I don't get a trigger happy to move my sell stops and then get triggered back on a bounce back, or I don't bail from the trade. And right now, got it very close, and there you go. 1, 2, 3 months in the red, never seeing positive on that trade, and then 1, 2, 3 months later, you reach that target like a champ. And yeah, so that's 1, 2, 3, 4, 5, 6 months, half a year you're in the trade, half a year for a 3-year 2-year, 2-year top. Hard stuff, man, hard stuff. Set your trade, move on, forget about it. That's what I have to say. And it's gonna permit you to ride this all the way to target. Look, these monthly candles, they have a lot of good. They remove the noise. I believe they give me higher probabilities of resolving the chart pattern to their implied measure move, because I'm not getting in on I'm not getting whipsawed out. But after that, you have to let it time. If it took a long time for you to get a solid pattern, you have to give it time for it to resolve. And 6 months, I'm not sure a lot of people could survive 6 months in a trade. I think it's harder than it looks. Like, people stay married for 40 years. I guess that's harder than it looks, right? Than changing girlfriends every week. Less adrenaline, but a harder thing to do. All right, that's a little philosophizing. And after that, price action went up, ranging. All right, here we are today. So let's remove all these crazy lines. Clean slate. There we go. So now this is the bullish move. I could set my alert right there at the 75.13 level. And my bearish breakdown scenario is right here. But right now we're closer to the breakout. And that's it. I'll set an alert for that bearish, that downtrend target. And we're set. I think this is pretty good. Either case. Oh, wait. This is not a good arrow. This is my exaggerated arrow. There you go. So this could be an A++ setup, honestly. Is there bearish divergence? Well, no, lower low, lower low. We'll see where the RSI is when we break out to see if we have some bearish divergence. If not, then this could be an A++ setup. So keep an eye out on the New Zealand USD pair. Like this very much. And hopefully it resolves where I could play this. All right. See you, everybody. Take care. Ciao.